Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 13th of June 2023, and in this week's edition we're going to discuss whether we can break out of the market slump here in Australia. But before I get into that, you do need to be aware that whatever I say is general advice only. It does not consider your personal financial circumstances, and you have to decide whether it's appropriate for you. So the main topic of discussion for the Australian market, and in fact the reason that we're in the slump, is the CPI growth here in Australia, the economic growth, and the RBA. So first of all, our CPI growth, which is taken as an analogue for inflation, remains very, very elevated, well above 6% still, and it's not really coming down at all. It's not coming down very quickly. It's remaining well above target range being 2 to 3%. With CPI growth at those levels, there's not really much the RBA can do other than continue to lift interest rates, because they need to bring CPI growth or inflation under control, and the only mechanism they have to doing that is to lifting interest rates. The problem is that the mechanism by which that transmits is higher interest rates should slow the economy, should slow economic growth, should slow aggregate demand, which should reduce inflation, which should reduce demand side price pressures. The problem is, a few days after the RBA lifted interest rates last week, we saw the economic growth data, and that was atrocious. Really weak economic growth, very, very lackluster growth, growth almost approaching 0%, almost approaching recessionary levels. Not quite, but sort of way weaker than expected and getting into real low numbers, and yet CPI growth is still very high. So we're really entering a risk of stagflation here in Australia, where you have high inflation but weak economic measurables. And it's a really difficult situation to deal with because, like I said, the RBA's mechanism for reducing inflation is by weakening the economy. Or what happens when the economy is already weak? And unfortunately, it looks like we're about to find that out. So, we'll have to watch the next few data releases. We are expected to see inflation start to come down, or CPI growth start to come down. But it's going to be a very interesting and difficult situation for the RBA if we do start to enter a recessionary period and inflation is not under control. What will be their decision then? What will they pursue in terms of policy then? And might I say that I wouldn't be surprised to see them not keep lifting interest rates, because I think that the link between interest rates and inflation is a very, very poor one, not as strong as central bankers would have us believe. And I think we'll start to see some return to the thoughts of Irving Fisher or other people who pointed to a different relationship between CPI and interest rates. So difficult situation for Australia. We're about to find out about the US situation. So we're going to get US CPI growth tonight. That's expected to continue to fall down to a headline rate of about 4.1%. That'd be fantastic. That's not too far above target. It's a big, big drop from where they were last year, and it really shows that their monetary policy has been working to bring inflation back under control. Or could it be that simply, the price pressures last year are starting to be removed in terms of supply chain bottlenecks and other things like that? We'll have to wait and see, but headline inflation expected to continue to drop, still above target, but core inflation expected to remain fairly sticky. And like I was saying on the previous slide, I think those core factors could be perhaps driven by the higher interest rates. We're seeing it here in Australia. We're seeing housing costs go up, again, probably driven by the higher interest rates. Could some of those core CPI factors remain a bit stickier simply because of the higher interest rates rather than in spite of it? Following the CPI reading tonight in the US, we're going to get the US interest rate decision, the Fed's funds rate decision. They're going to be meeting tonight and tomorrow night, and then we'll get their decision early on Thursday morning our time, about 4 a.m. Australian Eastern Standard Time. They're expected to not change US interest rates this time around, about 80% likelihood of no change according to the FedWatch tool, and then perhaps a higher likelihood of a change in July. So the market's kind of pegged them, no change this week, leading into a change in July. I'd say there's a more likelihood of no change this week than there is a change in July. And whether or not there's a change in July is going to come down to tonight's CPI and then the next month of US economic data. Whether it continues to show deflationary measurables or whether it's remaining inflationary. So that's going to be a big one for global markets, whether the US basically continues to reduce their CPI and whether they lift interest rates. And that will drive the US market from here, and our own market will take a lead from that. So our own market is going to respond to what they do. If they keep pushing up, I suspect we could see our market be dragged out of its sort of short-term slump a little bit. Finally, I wanted to talk about the economic downturn, because all this is building towards an economic downturn towards the end of this year, start of next year. Now, our market's been particularly weak recently because of the view that it's going to be a bad economic downturn, because of the view that to deal with inflation, we will have to basically go way too far and destroy our economy in a sort of, Great Depression style central bank move, where they lifted interest rates on the eve of a recession and caused one of the greatest economic downturns in history. So that negativity is what's driving our market to grind lower and lower. While in the US, it's quite the opposite. They actually believe in a soft landing scenario. That their central bankers have managed to convince the public that, yes, inflation is bad. Yes, economic growth is declining. Yes, our economic measurables are getting worse. But don't worry, we're going to basically catch inflation before we hit the ground. So that they think that they're going to sort of avoid that sort of hard landing, and that they'll deal with situation 1 before situation 2 gets out of control. So a bit of a difference in perspectives there, and perhaps that helps to illustrate the difference in sentiment of our market and their market at the moment. So let's have a quick look at our market. This is the XJO, the top 200 stocks in the Australian market, basically all the relevant parts of the Australian market. We can see that it remains on this sort of medium-term uptrend, and it remains in this sort of medium-term downtrend. So we've got a giant pennant pattern forming. We're holding around the support levels of 7,100, 7,085. Got the 200-day moving average there, got the uptrend line there. So holding around the key supports, the lower bound of the pennant. And given the recent strength overseas, and if we see strength in US markets after the next 2 days of data, I think there's a chance that we do head up to 7,200 by the time I deliver this video next week. If we have a quick look at US markets, they have been quite optimistic recently. We've seen them break 4,200, then we saw them break above 4,300, and continuing on that upwards movement, breaking those key resistance levels. So they tried to break through 4,300 all of last week, and then finally overnight they managed to do so. So the next upside target for me is 43.85, and that's going back in time a fair bit. This is their highest close since April 2022. Whether or not they can get there or even break it will come down to that CPI reading tonight. It will come down to that Fed decision tomorrow. But even if they can get there, or even if they can hold at these levels, I think there's every chance we do play a bit of catch-up across the next week and head to about 7,200 index points, just because there is so much optimism around the world that we can't help but feel a little bit more hope than we're feeling at the moment. Also because, investors' minds tend to have very, very short memories. So that's my call for this week. Let me know in the comments below if you agree. Let me know if you think we're just going to break lower. Again, I think it'll come down to what the US does with the next 2 nights of data. But, give us your view in the comments. Leave a like and click the subscribe button, and I'll see you in the next one.